Morning to the Fractal Effects live stream. Please make sure you read the disclaimer. If you're following along with us, make sure you do in a demo account, as this is for educational purposes only. This is not financial advice, and we are not financial advisors. We'll jump onto the charts in a minute. So we have NAS on the left, US 500 on the right. We are looking at the CFD contracts. No confirmation as of yet. So on the 4-hour and the daily, we are still bullish. 1 minute, we are bullish as well. We have traction model. We've taken out all the lows. Most likely take out Asia highs. But just waiting for confirmation. Right now we do have a red box. We had a pretty big drop. And now we're sitting inside our New York fair value gap. Middle of it. We've already surpassed 20 EMA. We'd like to see a crossover on the 5, turning this green at least. And then we're waiting for our bullish confirmation. Today is Wednesday. Again, make sure you watch the weekly setup video where we actually show you the exact footprint of each and every single day. Monday does something, Tuesday does something, Wednesday does something. So we have swept. Hold on 1 second. Sorry, charts are running a little slow. So we have swept previous day's lows. And we have all this relative equal high sitting up here. Change this to green. Today is another one of those days where there is no news drivers. You can see that. London pretty much stayed within a range. And only broke out upon New York Open. So right now we're below the 238, and we have no crossover of the 20 and the 50. We want to make sure that we're above all that. Hopefully that happens once we get confirmation. But this is where they're engineering new liquidity. There are people going short off this fair value gap and people going long off this fair value gap. That's why the midpoint is so important. It gives us a good indication of where price is sitting. Let's change that color. Leave it. So again, we want to see a crossover of the 20 and the 50. We want to get a bullish confirmation, because right now we have a red box, but we have a contraction model. Higher time frames are bullish. We want our 1 and our 5 minute to at least match up. So right now 1 minute has turned green, and we want the 5 minute crossover and the confirmation to let us know that this thing wants to go up. But because there is no news drivers today, it might take its time. And we saw a lot of seek and destroy earlier. The entire session stayed in the consolidation. Then we saw liquidity swept, and then a push up. So US 500 has already swept Asia highs, whereas NAS has not. So we're seeing some divergence. US 500 already has the 5 minute crossover. It's already above the 238. That could be an indication that NAS is going to be dragged up with it, or that US 500 was just gathering all that liquidity so they can both be pulled down. That's why it's important to see what happens in this fair value gap. Right now we're under it. Only when we start seeing candles closing above this are we going to start looking for a bullish push. Now remember, if we get a bearish confirmation, that would be a counter trend trade. Since the daily bias is bullish, our session bias then would be bearish. But we do have a red box if we get a bearish confirmation, and we're red on the 1, the 5, and the 15. And we can actually look to see if we get all of our points of confluence to push this down. Remember, the highest probability trades are the ones where the lower time frames match up with the higher time frames. Then you're on trend. So I'm just waiting for confirmation. So until we get a bullish confirmation, we're above this fair value gap and we have a green box under 5, we're not interested in a buy. And unless we get a bearish confirmation, 1 minute turns red, and we see a proper retracement, we're not interested in a sell. To be completely honest with you, this market has been all over the place today. So until we get those points of confluence, we're not interested. So we're just patiently watching and waiting. Getting a strong push down. Nothing of interest as of yet. Let's see if US 500 turns red on the 5. So we're back under the 238. If we get that crossover, this stays red and we get the red on the 1 minute as well. And this thing might want to push down. Just a whole bunch of back and forth so far. And on the daily time frame, that's where you see one of these like doji candles where it wicks high and low and the price just stays in the range. But let's see if we can't get a push. So now we got 1 minute is also red. We got that crossover. In order for us to be bearish now, I just want to see a bearish confirmation. Thirty seconds left in this candle. We're right at previous day's lows again. to retrade under it. Since the 1 minute just turned red, we are most likely seeing what's called a crossover and a retracement. So we might retrace back into this fair value gap that's been created and continue pushing down. And that would keep us on the 5 minute still under the 20 EMA, which is what we want to see if we're going to go down. Slowly making its way up now. US 500 almost has a crossover turning, which will turn our 5 red. Then we'll be matching up. We'll both be, both indices will be in a short-term downtrend, counter trend. Two minutes left. Let's see if it comes back up here, taps this, pushes down, gives us our bearish confirmation. Because of the sloppiness of the day, we'll only most likely be looking for that 1 standard deviation. So as soon as we get a confirmation, those points will show up on the chart. Around these kind of days, you want to make sure you aim for 1 to 3, obviously, but 1 standard deviation is always the low-hanging fruit. So our goal is, once we measure this out, that 1 standard deviation does give us our 1 to 3. So on the 1 minute, we are getting that retracement that I mentioned. And on the 5, it's coming back up to the 20 and that fair value gap. Zoom in. If we hit that 20, we'll consider that an early retracement. You can see our midpoint of the range right there. So we're now below 50%. So if it goes taps up here and pushes down, that would make sense. US 500 back at the EMAs. 5 minutes is still bullish. So as long as the 1 minute stays red, and we start seeing a push down, we might get a bearish confirmation. Now we're deep in that fair value gap right at the midpoint. We've already hit the 20. If that 1 minute turns green and we keep pushing up, then this might be one of those days where we just continue to seek and destroy, just up and down, back and forth, which are days we like to avoid. We want to make sure we're catching a trending day, not a consolidation day. In that wick, 1 minute 25 seconds left. So 1 minute remained red. Let's see if it sticks. We could be getting that push down. Three, two, one. Now we'd like to see this next candle push down. That will confirm everything. US 500 is still above the 20 and the 50 now. But we're also sitting inside this fair value gap. So I could be using this to push down, just like we have a fair value gap here. So if we break this low, we'll most likely be pushing down, and we'll wait for that bearish confirmation. If we break this high, we'll be going up. We'll most likely get a bullish confirmation. Now the 1 minute is green as well, US 500, matching up with the 5. Ideally, we'd like to see this just drop, catch up with NAS. Two minutes, 40 seconds left. Again, they're engineering new liquidity. There are people going short off this fair value gap. There are people going long off this fair value gap. But since we're red on the the smaller time frames, and we have a red box, it makes more sense that we get a bearish confirmation. But again, it could shoot up, take out those highs. That's why we want to break this range. It'll give us a better idea of which way this market's going. "40 seconds left. So if this candle closes down here, this will be an engulfing candle. At least it looks like it. 20 seconds. Okay, so we have an engulfing candle. Now we want to see this bottom broken, and we'll most likely continue to push down. If it breaks this bottom and still continues up, then again, it's one of those days where the market is just seeking and destroying liquidity, and we will not see a proper trend. We're already at 11 o'clock. So far, there's nothing here worth trading, nothing high probability. But keep in mind, there are people that trade this back and forth. There are even people that trade this consolidation, small range back and forth. But there's no point. It's not even, it's barely maybe 1-to-1 you're risking. And even though this gives you a 1-to-3, it hasn't picked a direction yet. You don't know which way it could go. It could go just turn on you at any time. The whole point of the strategy is to definitively tell us which direction it's going, or at least with a high probability, 70% or higher. That's as definitive as it gets in the markets. There's nothing that's 100%. But once we get that confirmation, there's a 75% chance that it is going to continue in that direction. Now, if this candle comes back in here, sweeps this one, and closes on the other side of the consequence encroachment of this fair value gap, it's just one of those days. Excuse me. Still just gesticulating. We'd really like to see this crossover on the 5, so we want to see this turn red. That'll be a better indication that this thing is most likely going to drop. We already have multiple candle rejections in this area. Right now, the bias is still bearish. We just want to break this. As soon as we break this and close under it, we'll most likely get our bearish confirmation, and then one standard deviation. So right now, this is still aiming to push down. The only point of confluence that we don't really have is the downside expansion model. We have more of a contraction model, which usually forces the market to sweep the highs. That's why we're waiting today for that confirmation. That's why we'd like to see a candle close under here. That would mean that we had a candle close below this fair value gap and remain there, which would be an indication that we want to push down. Otherwise, again, could just drag it all the way up. Got 25 minutes left in our stream. For anybody joining us for the first time, either this week or even last week, we had heavy news last week, CPI, PPI, which you're supposed to stay out of the markets for. You're supposed to stay out of the markets that entire week, Tuesday, Wednesday, Thursday, Friday. And then this week, because of that heavy news, there's no news. There's been no news Monday, Tuesday, and then today. So, again, just patience. Hasn't been the best 2 weeks. Hasn't really offered up much. Still getting that push down. 1 minute now. Red, we're just waiting for 5 minutes to go red on US 500, and then these two markets will be matching up. And we want to see a candle close below this red line to really let us know that this thing wants to push down. Till then, we're just patiently watching and waiting. So a great example of divergence. They held NAS here while they went and swept all the highs and gathered more liquidity for US 500. Keep in mind, liquidity is the market's lifeblood. So when they run out all these stops, they gather that liquidity and then they push the market. So as soon as 5 minute goes red, it'll be back in alignment with the NAS. So that's what we want to see. We want to see this turn red, and we want to see a candle close under here. That could still give us a high probability trade setup short if we get a bearish confirmation. Still consolidating. Now we're back at that fair value gap. Just zoom in and actually see where these EMAs are at. We're close to the crossover, but it's going to need at least 2 candles, 2 5-minute candles to close before that turns red. Back at that fair value gap. So we got 2 minutes left for this candle close. Let's see if it sets this wick as an intermediate low. Which could mean that the market wants to push back up. Again, this is why we wait for these points of confluence. If we break this top, we'll go into the top side, most likely get a bullish confirmation. We need to see a bullish confirmation. We want to get above the 238. We like to see the 1 and the 5 at least turn green. About 17 minutes left in our stream. Remember, if we're not in a high probability trade setup within 1 hour after the range formation, then we jump out, call it a day. Still at that fair value gap. US 500 also unable to get through that fair value gap. We got 45 seconds left in this candle close. I want to see if it sets this intermediate low. We have now gone above the wick of this candle. Now I just want to see a candle close above this fair value gap and get through New York fair value gap. Otherwise, if it just sticks here, again, it's just one of those days where they don't want to get out of the range. So, candle's closed. We're still in the fair value gap. On NAS, we're on the other side of that fair value gap now. But as soon as these highs are taken, this red line here, we will most likely get a bullish confirmation. But all the confluence has to be there. We want to make sure we get a crossover on the 5. The 1's already crossed. Now I want to see a crossover of the 20 and the 50 EMA. Continuing up. $13 left. Still stuck at that fair value gap. Again, until we break those either side of this range, we do not have a decisional bias. Make sure you guys have some kind of a news outlet that you follow. We usually use Forex Factory. We have no affiliation with them, but they're a good outlet as far as knowing exactly when news is going to drop, which days are not going to be high volatility. It's funny when it comes to news. Their news drivers are what drive the market, and at the same time, there are certain news events that we should avoid. All red red folder days. You want to avoid those. You'll see what I mean when you go on to any one of these sites. Red folder, red dot. It'll show you the severity of the news, but you want to avoid any red news. You want to be leery of some orange news. But you at least want to know what days are offering up news. Because when there's no news at all, there's also no incentive for the market to push. Not always the case, but I think today's a good example. About 11 minutes left. We want to see this range broken to either side in the next 10 minutes. So US 500 now driving through that fair value gap. That intermediate low is holding strong. Same thing here until this range is broken. We get a bullish confirmation. We're not interested. So we are On the 5 and the 1 minute, we're now back on trend. But also keep in mind, the US 500 has already swept the highs of London and Asia. The fact that we have not even made it up yet on NAS means that this thing could drop at any second too. We don't like to see this much divergence. So still waiting for NAS to clear one of these zones, either the high up here or the low down there. That'll give us a decisional bias, at least a directional bias, I should say. About 8 minutes left till the end of our stream. I believe there is some news drop tomorrow, if I'm not mistaken. Let me check. Thursday, we do see core retail sales. That drops at 8:30. That'll definitely push the markets. Crude oil inventories as well at 11 o'clock. Still just stuck there. You see how muddy this day is? On the 1 minute we're green, on the 5 and the 15 we're red. So even the counter trend isn't matching up. And to be on trend, we want to have 1 and the 5 and the 15 all green. Then we have the divergence, which means this could be a liquidity sweep and a push down, or this could just push, or rather I should say pull NAS up along with it. This is not the best day to be trading, at least not this session. About 6 minutes left. Still stuck in the range. Still stuck in this fair value gap. No real decision as far as which direction the market wants to push, if it wants to push at all. Even London, as mentioned before, we consolidated. We got a late confirmation, which was way past any time we would have even been interested. Then a short retracement, and then it did break the top here. Asia is the only session that actually looks pretty clean. We had a bullish confirmation, deep retracement. Actually, this would have been a false day because we broke the range at the bottom. Had a candle close right here. So again, very, very muddy day across all the sessions. Now, we only focus on the indices because they usually foster up at least one solid trade setup. But you can set alerts across all of the pairs that you normally trade, any other asset. And then as soon as you get a confirmation on your phone, then you can switch over to that chart. Here during our live stream, there's only so many screens we can share and so many assets we can take a look at the same time. That is what some of our advanced students do. They find all the pairs that they're interested in trading, be it Forex, oil, and then they set a notification which comes straight to their phone. All you gotta do is just add an alert. That way they don't have to watch multiple markets. They just wait for that notification, then they just jump over to that chart. Going forward, maybe we'll add a couple of those notifications as well. I think for educational purposes, it's usually good to just follow one market just so you see how it moves, but so we can show a few more trade setups. We'll start adding those notifications because there's always going to be a trade setup across many of these assets. So we'll set some notifications on some of the Forex, oil, obviously the indices we'll be watching, and that way as soon as we get a notification we'll just jump over those charts. But we're still stuck in that range. 2 minutes left till the end of our stream. But thanks for checking us out. Please check us out on fractaleffects.com. Make sure you hit the notification so you know when we're live. And please subscribe for future streams. We'll be live again tomorrow. And we'll wait for this candle close. Ten seconds left. Okay, that's our time. Again, please join us tomorrow. Have a good rest of the day.